Welcome to the November 24th, 2025 Advance Report from McGowanGroup clients. Happy Thanksgiving. Well, what was that? A wake-up call. You got some wake-up calls going through the markets and you're due for a correction, and crypto absolutely smashed. You've gone from 126,000 a coin to actually as low as 80,000 a coin intraday, right? 126 to 80, that is a huge decline, a significant bear market cycle, and there's leverage involved. Let's cover that too, because this shockwave through the crypto market is absolutely huge. That whole landscape has changed. The entire crypto markets were worth $4 trillion at the recent peak in October, right? That's a month ago. Now, 2.7 trillion, likely 2.6 trillion over the weekend. So you've lost $1.33 trillion from that recent peak, and the leverage involved. So we did two different examples of crypto leverage. Coinbase Global, and internationally, the other exchanges have been more aggressive about their lending, but Coinbase is already down from 444 to 241, nearly dropped in half already. Coinbase Exchange. Whoa, what's that? MicroStrategy. It looks like it's headed for micro price. Take the peak at $543, now $176. What's that? MicroStrategy, well, Mr. Saylor said we're going to be a Bitcoin treasury company. We're going to borrow money and buy the Bitcoin. We're going to sell more shares on top of you and buy more Bitcoin. And we're going to have a big old pile of Bitcoin. Well, this recent decline puts them pretty darn close to what they actually paid for the Bitcoin. That's potentially billions of dollars if it goes below their cost, where the company has never made money if you start to subtract from that price. They were trading at about 2.5 times the pile of Bitcoin that they have. And remember, they've got the debt. They've issued lots of new shares. They're going to have to service the debt. I don't know. Are they going to sell Bitcoin at a loss? This is not a pretty picture, because you got that debt over here and they have to pay interest, and that's going to come off of earnings too. That is a world of hurt. Right? A wake-up call on speculation, kind of like we had in early 2022. Now, this spooked the market. When is good news bad news? There it is. All right, so the Bureau of Labor Statistics, they're protesting because they got furloughed 6 weeks, and they're slow walking the data, right? They've already had 2 weeks, so they finally released September, right? They finally released the September numbers. Actually, they were good, 119,000. Came out right as NVIDIA was reporting earnings, right? NVIDIA had a fantastic report. When is fantastic not good enough? NVIDIA this week is down 20% from its recent peak, right? That's a wake-up call. And part of the reversal Thursday, when the market went from a big old gain to a big old loss, was this report. 119,000 net new jobs. The Fed has no evidence that they need to cut. And the Bureau of Labor Statistics bureaucrats that are all upset about their furlough, I guess, they said, well, we're not going to release the November data on December 5th. It'll be December 16th. Then we'll give you the October data. Well, we already know what the October data is. It was 42,000 net new private payroll jobs, according to ADP, which I trust their numbers a lot better because they process more payrolls than anybody else. Anyway, Bureau of Labor Statistics not going to give the Fed enough data to cut. So do they cut December 10th? If not, likely the next meeting, you probably have 3 cuts coming for 2026. And that's based on the inflation rate at 3 and the current Fed funds rate, essentially 3.875. All right, the Dow left with a 9% return after the tech smack this week. The wake-up call, and they're going to start to separate tech. Who's writing checks and who's getting checks. Now, you heard about all the data centers going in, and you may have heard about liquid natural gas. What about energy infrastructure? Nice dividend, and here's what the returns look like. If I go back to 2018, that's before the pandemic shutdown. This is one of the holdings, not a recommendation for your portfolio till you come down and get a plan. But here we have 11% average annual return with dividends reinvested. If you spent the dividends, which is good if you're in retirement and you get dividends, then you can pay your bills and have some left over. Well, you have an 8% if you spent the dividends, an 11% if you did not. That is fantastic. Here, that was a quick drop. Really, it is essentially 2/3 in the government shutdown. What a great opportunity to reinvest. Now, if you had bought it 5 years ago, that's a 27% annualized return when it all got smashed up. Pipelines are the tollway for the natural gas, and you get paid every day. Wow. And it's real estate that nobody can compete with. Wow. You take the liquid natural gas sucking on the Gulf side and the data centers on the West Texas side. That's why natural gas is up 40%. And on our networthradio.com, we have a great interview with these guys about what the future holds, because natural gas could be the sleeper for 2026, and the infrastructure to provide it is a good way to get paid. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. Thank you for tuning in. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.